Silver just exploded. And if you turned on the financial news to find out why, you got the same tired answer they always give you. Speculators, momentum traders, a short squeeze, hot money chasing a hot chart. They want you to believe this move is a mood, a fever, something that came out of nowhere and will vanish back into nowhere the moment the excitement fades. And that story is not just lazy, it is wrong. It is designed to make you nervous, because a nervous holder is a holder who sells, and a holder who sells is exactly what the trading desks need. If you own silver right now, or you have been thinking about it, this matters to you more than almost anyone, because the reason they give you determines what you do next. If you believe this is just gamblers pushing a chart around, you sell into the strength and you feel clever for a week. But if the move is something else entirely, something structural, something physical, then selling here is the mistake that haunts you. So let me walk you through what is actually happening under this price, the part the big banks would rather you never sit down and understand. Here is the one fact that changes the whole picture, and I want to give it to you right up front so you know I am not just teasing you. Gold and silver are treated by the market as cousins, two precious metals that rise and fall together. But they live completely different lives. Gold, almost all of it, is hoarded. It gets pulled out of the ground, refined, poured into bars, and then it sits in a vault, in a safe, around someone's neck. Nearly every ounce of gold ever mined in human history still exists and is still accounted for somewhere. Silver does not get that gentle retirement. Silver gets used up. It gets burned. That word burned is not a metaphor. Silver is the best natural conductor of electricity and heat we have ever found. Nothing else comes close. That property makes it indispensable to the modern world, and it also makes it disposable. It is in the solar panel on the roof. It is in the electronics in your pocket, your car, your appliances, the switches and contacts and coatings that make all of it work. And in each of those things, it is used in tiny amounts, a smear, a few grams, a whisker of metal too small and too scattered to ever be worth digging back out. When that solar panel or that circuit board reaches the end of its life, the silver inside it, for the most part, is simply gone. Not recycled, not returned. To recover it, you would have to spend more money and more energy chasing those flecks than the metal is worth, so nobody does. It gets dispersed into the world in fragments too fine to chase. Gold gets hoarded. Silver gets consumed and thrown away. Hold on to that, because it is the entire story, and once you see it, you cannot unsee it in any price move silver ever makes again. Now let me connect that to the price you just watched jump, because this is where the fog they blow at you starts to clear. If silver were only a speculative plaything, then supply and demand would roughly balance out over time, and the price would wander up and down on sentiment alone. But that is not the world we are in. The world has run a structural silver deficit for several years in a row now. Say that slowly. For year after year after year, the world has demanded more silver than it has produced. The best independent survey of the silver market, the one the industry itself relies on, has confirmed a string of consecutive annual deficits and a large cumulative drawdown of the above-ground stock that used to cushion those gaps. Think about what a deficit actually means in a metal that gets consumed. Every year, the mines and the recyclers together bring a certain amount of silver to the surface, and every year, industry and investors together want more than that. So where does the extra come from? It has to come from somewhere, because the physical demand does not go unmet. The panels still get built and the phones still get made. It comes out of inventory. It comes out of the stockpile that was built up over decades, sitting in exchange warehouses and vaults, the visible above-ground metal that was supposed to be the world's cushion. Each deficit year, that cushion gets thinner. And unlike a normal commodity, the drawdown is not being refilled by tomorrow's recycling, because the silver that gets consumed does not come back. This is not a story about traders being excited. This is a story about a warehouse quietly emptying, 1 year at a time, until one day someone reaches for the metal and it is not there at the price they expected. That is what an explosion looks like from the outside. From the inside, it was years in the making, and the people paid to watch that warehouse said nothing. And here is the enemy in this story, the part they do not want said out loud on the financial channels. The people who run the paper silver market make their living on the churn. They profit when you trade in and out, when you panic, when you chase and then dump. To them, a calm, informed holder who understands that he is sitting on a physically scarce, consumed, non recyclable metal is a problem. That holder does not churn. That holder does not sell into the shakeout. So the story they feed you is always the same. It is just speculators. It will not last. Don't get attached. Because the last thing a trading desk wants is for you to understand that the metal underneath the paper is genuinely, structurally running short. Let me give you a picture of just how strange silver's supply really is. Most of the silver that comes out of the ground each year is not even mined on purpose. It comes out as a byproduct, a bonus, when companies dig for copper, lead, zinc, and gold. Which means the amount of new silver reaching the market is chained to decisions made for entirely different metals, driven by the price of copper or the demand for zinc, not by anything happening in the silver market itself. If the price of silver doubles tomorrow, you cannot simply flip a switch and pull twice as much out of the earth, because most of it was never the reason the mine existed in the first place. A brand new mine dedicated to silver can take the better part of a decade to permit, finance, and bring into production, if it ever gets built at all. Supply is stubborn. Supply is slow. Supply is decided years in advance and mostly for other reasons. And demand, the industrial kind, the kind that needs the metal this quarter to build the thing on the assembly line, does not politely wait around for the miners to catch up. This is the moment I want to pause, because if any of this is landing, then you already sense the size of what is at stake for your own savings, and I do not want you to leave without knowing the practical side of it. Here is something most people never find out until it is too late. While ordinary savers are being told precious metals are a gamble, the largest and most sophisticated buyers on Earth, the central banks, have been accumulating gold at a record pace, more than 1,000 tons a year for 3 straight years, roughly double what they bought the decade before. They are not doing that for fun. They are doing it because they understand what physical, unfreezable, unprintable metal means when the paper world gets shaky. And here is the part almost nobody tells the average retiree. There is a completely legal, well-established way for you to do the very same thing inside the retirement account you already have. If you are holding $100,000 or more in a 401k or an IRA, you can move a portion of it into real physical gold and silver, held for you, without triggering taxes and without triggering penalties, using what is called a self-directed precious metals IRA. This is not some loophole for insiders and hedge funds. It is for the ordinary person who has quietly built something and wants to protect it. We put together a free guide that walks through exactly how it works. If you are watching this on your TV, just scan the QR code on your screen. If you're on your phone or your computer, go to jeffreedguide.com. Take a look and then come right back, because the next piece is where this really comes together. Now, back to the metal, and to the objection you might be forming in your head. Somebody watching this is thinking, but wait, if silver gets too expensive, industry will just use less of it. And that is true, up to a point. And I am not going to hide it from you, because I am not here to sell you a fairy tale. At high prices, engineers do thrift the metal. They redesign to use thinner layers, they substitute where they can. In fact, the use of silver in solar took a real step down recently, as manufacturers responded to higher prices, one of the largest such reductions on record. That is an honest headwind, and anyone who tells you silver only ever goes up is lying to you. But here is why that objection does not break the thesis, and this is the part almost nobody gets to. Even as solar thrifts its silver, whole new sources of industrial demand are rising to soak up what gets displaced. The build-out of data centers and artificial intelligence infrastructure needs enormous amounts of high-performance electrical connection, and silver is the best conductor there is. Automotive electronics keep growing. The world is wiring itself up more every single year, and silver sits in the joints of all of it. So even when one mouth eats a little less, another mouth opens wider. The consumption does not stop, and every ounce consumed this way follows the same one-way road, into a device, then into a landfill, dispersed, gone, never coming back to the market. That is the difference that the paper traders desperately do not want you to sit and think about. When gold is sold off in a panic, the metal does not disappear. It moves from a scared hand to a patient one, and it is all still there, every ounce, waiting. Silver is not like that. The silver that got burned into 10 years of solar panels and phones and cars is not sitting in a vault waiting to come back and flood the market when the price rises. It is scattered across the surface of the Earth in pieces too small to ever collect. Gold's supply is a lake that never drains. Silver's supply is a river running out to sea. And you can see the physical tightness showing up right now if you know where to look, in places the headlines skip. Metal has been getting pulled hard toward Asia, with the price in Shanghai trading at a persistent premium over the Western price, a signal that real buyers over there are reaching for real metal and having to pay up to get it. That same country has flipped from being a net exporter of silver to a sizable net importer. On the Western exchanges, the registered inventory, the specific slice of metal that is actually available to satisfy delivery, has been drawing down as buyers stand for delivery and take their bars and walk away with them. These are not the fingerprints of gamblers. These are the fingerprints of people who want the physical thing in their hands and are willing to empty the shelves to get it. Let me be very clear and very fair with you, because trust is the only thing I actually care about here. None of this means silver goes straight up. It will not. Silver is one of the most violent, gut-wrenching markets there is. It can drop sharply on nothing more than a change in the cost of holding a paper position, on a hawkish turn from the Fed, on a wave of traders being forced out of crowded bets. We have seen the exchanges raise the cost of holding silver and watch the price fall around 30% in a matter of days, with nothing fundamental about the metal changing at all. The paper price and the physical reality can pull apart, sometimes for a long time. So if you go into this expecting a smooth ride, the first shakeout will throw you off, and throwing you off is precisely the point of a shakeout. Which is exactly why the structural story matters more than the daily story, and why the enemy keeps you staring at the daily story instead. The Fed can move the paper price around. With the Fed stance now clear and leaning hawkish under Kevin Warsh, the pressure on the paper price is real, and the metal has already corrected hard off its recent highs. But the Fed cannot print an ounce of silver. Kevin Warsh cannot conjure metal into a warehouse that is drawing down. No central banker on earth can unburn the silver that has already been consumed and dispersed. The paper game sets the mood for a day. The physical shortage sets the floor for a decade. And the financial media will spend all of its time on the mood, because the mood is where they make their money, and almost none of its time on the floor, because the floor is where you would. So let me tell you where I think you actually are, standing here right now watching this. You are early. Not fashionably early. Genuinely early. The central banks already understand the value of physical metal, and they are buying. A handful of sophisticated investors already understand the difference between hoarded gold and consumed silver, and they are positioned. But the mainstream, the pension funds, the financial advisors on the big networks, the ordinary saver down the street, they have not caught on. To most people, silver is still just a shiny gamble, a lottery ticket, a thing their nephew mentioned once. That is what being early feels like. It feels like standing in an empty room and being told the party is coming. It feels lonely and a little foolish. And that feeling is exactly the price of admission. Because if it felt obvious and comfortable, you would already be too late. And by the time it is obvious, the easy part will already be behind us. By the time silver's story leads the evening news, by the time every advisor on every channel is telling their clients to own some, by the time the ordinary saver finally believes it, the metal will already have made its big move, and the people who understood it first will already be holding it. Nobody rings a bell. Nobody sends you a letter in the mail telling you the window is open. Nobody is going to call you and tell you to act. The invitation you are waiting for does not exist. The understanding you are building right now, in these few minutes, is the only invitation you are ever going to get. Now, what should you actually do with all of this, in plain, practical terms, without me pretending to be your personal advisor? Because I am not, and this is a case I am making, not a guarantee I am giving you. First, if you choose to own it, own the real metal, or metal that is genuinely held for you, not a paper claim that lives and dies on someone else's balance sheet. Because the whole lesson of a physical shortage is that the physical thing is what has value. Second, size your position so that a sharp drop cannot ever force your hand, because forced sellers always sell at the bottom, and the shakeout is engineered to create forced sellers. And third, do not sell into the shakeout. The shakeout is where the metal moves from the impatient to the patient, and this whole video has been about which one of those you want to be. Because here is the truth that ties the whole thing back to where we started. Silver did not just explode because a room full of gamblers got excited. Silver exploded because it is a consumed metal running a multi-year deficit, dug up as a byproduct, burned into a billion tiny devices that will never give it back, wanted more each year by an industrializing world that is wiring itself up faster than the minds can keep pace. That is not a mood. That is a mechanism. And a mechanism does not go away when the excitement fades. It just waits for the next time someone reaches for the metal and finds the shelf a little emptier than before. If you watched this all the way to the end, then you are exactly the person this last part is for. We hold a free, no obligation, one-on-one educational web conference for people with $100,000 or more in their retirement savings, where we walk through how this actually works for your specific situation, calmly, with no pressure and nothing to buy on the call. And I will tell you honestly why now, and it is not fake urgency. The best time to make a decision like this is precisely when nothing feels like an emergency, when you can think clearly and act deliberately instead of scrambling after the crowd has already figured it out. That calm window is open right now. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com and mention that you watched this all the way through. Understand the difference between the metal that gets hoarded and the metal that gets burned, and you will understand the real reason silver just exploded, long before the crowd ever does.